Hello everybody, welcome back to the channel. Today is day 184 or 185 of my trading journey, February 26th, 2025. And I did not make a video yesterday. I had a friend visiting from out of town, so I did not have the time to. So in this video, I'm going to cover what I did yesterday, and I'm going to cover what I did today, which was nothing. I slept in till 3 hours after market open today. I did not do any trading at all, but I just want to analyze the price action from the last 2 days, give a quick account of my account. So I'll start really quick by just showing the trades I took yesterday. Then I'll show my account and talk about the drawdown I'm currently in, the slump, and then just summarize it all at the end and kind of talk about what I'm planning on doing after this video, where I'm gonna want to go from here. So yesterday's trades. This was the first trade here. I got short. The hourlies were quite bearish, but this wasn't a great time to take a trade, because on the hourly we can see two wicks underneath. We can see that we're extended away from the 9 moving average and the 21 moving averages. They're open up. It makes sense that at this point, we've had 3 measured moves down, A, B, C, D, E. It makes sense that we get our pullback up. So it's just not a great idea to be short here. If anything, it would have been a good idea to get long down here when the EMAs were very separated, but I don't want to fight the trend. So what happened after that? I got stopped out. I think I took 2 short trades here. So one on MES, one on MNQ. They were at the same time, so it really was like this was like a 3R risk trade. Not the greatest, but so that was just dumb. Like, I oversized there when I shouldn't have, and it led to a bigger loss. Third trade, which is really the second trade, because the first 2 trades were the same trade, just on different indices, I don't know. So I flipped, decided I wanted to get long. This trade actually went my way quite a bit from where I entered, and I could have got out for like 2R up here. I could have made like $100, but ended up coming back against me, stopping me out for break even. So did not have a very good day yesterday. Now I'm going to show my account balance. So this is from February 6th to 2026, or February 6th to February 26th. As you can see, from February 6th to February 12th, I had a pretty good run. I made $441. I think that was about 9R or 8.75R. I've since given it majority of it back. I'm only up 1.5R now without fees, and I'm break even basically when you account for fees. I'm actually down $4 when you count for fees, because I've had $81 in fees. So quite unfortunate. And you know, a lot of this can be traced back to just these last 2 days here, where I gave back $300 ish. Looks like I gave back almost 6R. We'll just say 6R, because it would be actually 6R or more than 6R if you account for the fees. And it's just risking too much per trade. I was risking the appropriate amount per trade, all up until the last till February 24th and February 25th, and you know, it's just unfortunate. I think I was getting a little bit overconfident because I went on a 9R run, and it's just a reminder, like, that's just variance. Like, those winners, that was just variance. That's part of my plan. I'm probably going to have periods like that where I'm extra profitable, and I'm probably going to have periods like this where I'm losing extra. And that is why we have to have a consistent risk management. That is what I'm very over the past couple of weeks I was thinking about risk management, how I want to do it. And I'm very committed to the Linda Raschke, Jason Shapiro fixed risk method, where every time I bet the same amount, because hey, I don't know what the big winners are going to be and what the big winners are not going to be, and I make dumb mistakes often. So I want to just make sure I'm taking trades that have at least like two green, like that are green at the higher time frame. Like 2 out of 3 of the higher time frame stress tests I want to see be green. I'll say mean you can and probably should take it. 2 out of 3. Oh, okay. I'm messing this up. Edit note. But yeah, so when I take trades, I want to like have an idea of what I'm looking for before I take it, and not just and not. Man, my apartment is cold. I'm sorry, but it's just like blasting cold air on me. I want to have a good idea of what I'm taking before I take it. So let's go to the chart real quick. Yesterday, we opened. I'm going to make this big. We opened here. We had 2 candle bars to the upside. But we were at the prior day low, which was right here. Okay, we were basically at the prior day low. This is where the open was, okay, right here. The hourly EMAs were very bearish yesterday. So when we get a signal bar, when we get our first signal bar where we'd get a confluence of higher time frame factors, then we know that we can take the trade. So the higher time frame factors I look at are the hourly EMAs. That's the first one and most influential one from my system. And then I also look at are we inside or outside the prior day range or at the edge, and are we above or below the daily candle open? Because oftentimes it's better to go long above the open level and short below. So the first 2 bars looked pretty bullish, but then we have this really, really bearish bar that just wipes out the last 2 bars. Okay, and this is a pretty good selling signal. But hey, you could argue, hey, we're still kind of in a range. There's some wicks here. I don't really feel comfortable taking that. But then we get bar 4, and it's like, okay, this is a signal bar. It's a hammer bar down. We're below today's open. We're below the prior day low. And we're also have the hourly are bearish. And then the 5-minute EMAs are also bearish. So I'm going to get short here, okay? And I'm going to target a measured move down. So this stop loss on this candle, it'd be 13 points. So you should target about 2R, 26 points. 85 minus 26. You just say it's 25 to round down and just target 60. Boom, boom, boom. Pause, boom. Okay, hit the second pivot level. Okay, and it just dropped 25 points in 1, 2, 3, 4, 5 candles, 25 minutes. Really aggressive move down. Should have been short, but I wasn't. Now let's go to today's price action. And I have not analyzed today's yet, so I'm just going to be doing this live with you guys. Pullback candle. It opens at the close, basically, of yesterday. That's our first signal candle. bar 2. We can put a limit set, buy order above. Would not have been filled, but we have this pretty bullish looking candle. Like it tried to go short, then it was rejected. And at this point, I would consider buying the close of this. Stop loss below candle 1 and 2. It's about a 10-point stop loss. So I want to target at least 20 points. You could target the prior day high, but 96. Yeah, the prior day high is 20 points, but we pushed down pretty hard, so it kind of makes sense that we'll probably retrace a little bit. Prior day high would be hit in 4 candles, and then this pivot level above 10 points beyond. So that's 30-point move. That's hit in like 6 candles, so just 30 minutes. But then we see on the higher, we got to make sure we're paying attention to the higher time frame, okay? Now we've pulled back to the 21 EMA. We're at this key level here where it pushed through and broke through before, in previous support now will act as new resistance potentially. But the EMAs are still too separated to the bullish side, so I'm not ready to go short yet. But at this point, we have a winner. It's looking good, but I just don't want to do anything yet till these EMAs tighten up. All right, so now we're getting lots of wicks. It's really starting to stall. It's not looking good. EMAs have not tightened up enough yet and they're going to start switching over to be bearish. All right, now they're starting to tighten up. And now we're not rising anymore. And they're really starting to tighten up. At this point, we are inside a range a little bit. Like this is a rangy zone. But we're also on the hourly level, which is what we want to play. The EMAs are tightening up. They're starting to look like they're going to switch over. At this point, I'm comfortable going short after this bar and just putting the stop loss above the day's high at 24. So it'd be like a 10-point stop loss. Okay? Okay, push down. Good sign. Hammer down. It's another decent short bar. All right, we're pushing up. Doesn't look as good. Okay, it pushes up, but it doesn't go above the day's high. Pushes down. That's a pretty good looking short bar because we consolidated a bit. The EMAs are switching. We have a hammer down. I would be getting short here too. Stop loss above the high of that candle. All right, we're breaking down. And at this point, where am I targeting? Okay, I'm gonna target near like the recent swing lows. So you could target the middle of this range here. Targeting the middle of that range there would be good. And if you want to be really aggressive, you could target near the bottom of these bars. Okay, and I'm not just saying that because that's where it ended up going. I'm saying that because this is where the buyers came in, but we know that the bulls or the bears want to fight over that level. The bears have been dominating the market since last Thursday. We know they're going to try and fight over a level more than once. The market is efficient after all. But right now at bar 30, if I'm short at bar 37, 38, the EMAs are just starting to expand. We've got the hourly bearish EMAs on our side. I'm feeling really confident about this short. Where would I target? A safe target would probably be right here at the middle of the prior day's range. That's 25 points down from about where we entered. 20 to 25 points down. And if you wanted to really see a dumpage, you could target even lower. But let's just watch what happens here. Market's really expanding down. Okay, we know that markets usually make 2-leg moves. So first push down. It's flagging here. and then we get another dumpage, okay, right around when it caught up to the 9 EMA. Looking really bearish still, and it's just kind of a gradual decline down. And at this point, I would just be done trading because it's made a good move up and a good move down. Okay, so I just gave great price action analysis after the fact. Anybody can do that. What matters is, can I do it in a live time? That's the most important thing, is being able to do it in a live time. And I've had a lot of great price action where I've had chances to do it in a live time the past week, but I've been too fearful to, and I haven't been executing. I've been distracted. I've been sleeping in. I've been fearful of just risking money. And I gotta get rid of that fear, especially because I'm not risking as much money anymore. Like, why do I need to be scared? If I see my system, if I see my setup appear, I just need to execute. Okay, I need to keep focusing on this hourly time frame. I need to just keep following this plan, right? Are we above or below the opening level? Are we above or below? Are we above the prior day high? Should we long there? Are we below the prior day low? Should we short there? I'm not going to get into my plan. It's like it says right at the top of my plan. You know, it's not the plan that determines whether you're going to be successful. It's you. It's me in this case. And I just need to be more confident and comfortable executing. We're having a bit of a drawdown, but look, at least we're not blowing up. You know, it sucks to have a drawdown, but it's part of trading. And I'm still confident that I'm on the right track. Like, I just need to keep, if you can't grow a small account, you can't grow a big account. And I just need to get comfortable growing this small account so one day I can, you know, right now my account's like less than $1,000, but one day I want to put in $5,000 and start risking $100 per trade. And that would be 2% of the account, but the odds I think would be more in my favor then, and I'd feel pretty confident. The other thing is when I do size up, because I'm not going to size up till I am to $100 risk per trade and $5,000 account until I can prove that I can grow this small account. And maybe like once this small account hits like 2,000 or something, then that's maybe when I'll throw in more money and double my risk size. Because right now my account's at like $800, so if I grow it up to 2,000, I'll have doubled the account, and that's going to take a while, so I'll have more confidence, and yeah, I think that'll be good. Okay. What else? Position management reminder. I need to be better at letting stuff ride. Because, like, honestly, like, look, I said I would get short here on bar. I don't even know which bar I said was a good bar to get short. Maybe it was bar 29, like right in the middle of this range. I would have to wait 40 minutes before I start going down. And 40 minutes in a position is pretty uncomfortable. Like, the best thing to do for me is I just need to let it ride and set and forget and not be fearful. Like, this is the biggest chart on my screen, the 5-minute. But the chart that matters the most, the chart that shows me what moves I'm trying to make, is the 1 hour chart. Okay? And it can take 1 to 2 hours for a trade to work for the timeline I'm trading. And if I'm too focused on the 5-minute, it's just going to make me nervous, and I'm going to get stopped out, and I'm going to micromanage my position. And I have to relinquish control. I have to let it go. Okay, I just have to. It's what I got to do. So that's what's up. I think missed out on some good trading today, but so be it. It's just the way it goes, and I don't know. I mean, I'm feeling hopeful and good about where we're going, and I just got to keep going and expect that it's going to take some time and not rush things, because nothing good ever came from rushing. I just got to go slow, be patient, and trust that everything will work out. And that's what I'm going to do. So I'll end on that note. Thank you for watching. I appreciate it. Confident about where we go from here. We're in a drawdown, but it's all good. I'm not fazed by it. That's why I started risking a lot less money, because I wanted to be in a place where I could lose 10 trades and not be phased. And even sizing up a little bit like I have been prematurely, I'm a little phased by it, but it's not like when I was trading an average position size of $150 or $200, which is, you're mathematically guaranteed to blow up if you're trading an account the size I was trading. So we'll end it there. Thank you for watching. I appreciate it. Let me know what you think in the comments, please. Let me know, if you think this was a good video. Do you think I'm on the right track? Do you think there's something I can work on? I know there's stuff I can work on, but curious to hear it from you. The big one, I think, is letting positions ride and not interfering, because once you have money at stake, you're way more biased. They talk about this in all the market wizards. Just, trust your unbiased self that made the decision to get in when you didn't have money on the line. And as long as you don't get in with too much money, you won't be too biased to get out. So that does it for me. Thank you for watching. I appreciate it, and I'll see you next time. Peace.